Hello, everyone. Welcome back to the Economic Empowerment Podcast. And this paper I found is really interesting as well. It talks about financial skills and search in the mortgage market by Marta Kota and Andy Stirk. I'll show these people more later. So this paper answers these following questions. Are financially unskilled borrowers disadvantaged in the mortgage market? How do financial skill differences translate to consumption inequality? How effective is financial education reducing financial skill-based consumption gap? And what are some implications of mortgage accessibility for financial education? So we approach it with the two-step approach. So first, the researchers approach it by looking at like financially unskilled loss in the mortgage market. And secondly, the mortgage search framework with endogenous financial skills and search intensity. And then they look at the US data, which is the mortgage data, and also which estimates the distribution of financial skills for every bars in an SMO. And the financial skills search effort in mortgage shows that the financial literacy score, how it is related to the mortgage market, and the number of lenders considered prior to formal application of the mortgage. So I think this study is extremely interesting in the sense that I'm doing financial literacy because there is economic empowerment. And I think it is truly important for people to know and hear about it. And as we can see here, there is a significant relation between that. If you're more financially literate, there's less likely of a chance that you'll be stiffed up in the market for mortgage, as we can see in this graph. And as we can see here, the findings shows that savvy borrowers are 5% more likely to consider one more lender. And this is the literacy level for the interest rate, and you can see the floor interest rate peaked with when density is 0.6. And back of the envelope estimates for $100,000 loan, financially unskilled borrowers lose $9,329 in mortgage. That's why you need to get yourself financially literate, whether you are or are not, like interested in finance or becoming an entrepreneur. And structured search framework is basically leverage the current way borrowers search for a mortgage. And these, again, are a lot of details about the equations and stuff like that. So I won't go into too much detail because it's extremely complicated. And to build a model, and because you need to take everything in and you have to take in account of independent variables and stuff like that. And so the researcher basically decomposed the growth into three channels: time preference, high mortgage pay to save due to expected mortgage and rate change, and precautionary savings due to expense shock. So what are some untargeted solution patterns that the researchers found? Is that financial savvy borrowers are 5% more likely to search more and 30% likely to refinance to get the most ideal option, which saves money. And these are just some other things that the researchers have found, which is like mortgage repayments, which translates to consumption inequality. And financially unskilled secure higher mortgage rates, which aligns with consumption inequality estimates. And the financial skill-based consumption inequality, as we can see here, that the rate is extremely different, and the mortgage rate is basically going up consistently. And as we have high financial knowledge, you can see the density of 0.03 is the highest. You can see there's a large difference. And these are just basically the data set done by using R and other, data analysis tools. And these are basically it's basically the data and the model it feeds into. So I think, and these are the references, of course, and these are the emails if you have any question about this paper. I really think this is interesting because when you look at the real estate market, a lot of, on Instagram, social media, a lot of people tell you that like you don't know anything about, real estate investment and stuff like that. And it kind of shows here that people with less of a financial knowledge in the field are less likely to, are more likely to lose money in a mortgage than others, because that's just how it is. And it's quite sad. That's why I'm opening this platform for, financial literacy and stuff like that. So I just hope you guys can learn something to be financially literate, in the sense that it's so important. And yeah, and I'll see you guys in the next poster presentation.